Well, welcome back to the BIS Innovation Summit. My name is Hyun-Song Shin. I'm the economic advisor and the head of research here at the BIS. And in this session, we're going to explore how central banks can play a pivotal role in financial inclusion. Now, just to set the stage, of course, central banks issue the unit of account, and so trust in the currency is ultimately grounded in the trust in the central bank. And some central banks actually build on its role at the center of the monetary system also to provide public payment infrastructures. And these infrastructures serve as the foundational public good that sets the backdrop for the competition for the private sector. And in this session, we're going to be exploring a really interesting example from Brazil, which is the PIX instant payment system. It was launched in November 2020, just over a year ago, but it's really seen a very rapid adoption. And this session actually coincides with the publication of a BIS bulletin that we've just sent out that describes the experience in Brazil. And today we're really privileged because we have, we have the privilege of talking to the person who's been guiding this whole initiative. It's Governor Roberto Campos de Neto of the Central Bank of Brazil. And we're really looking forward to this chat, Roberto, and welcome. So let me start. Thank you, Roberto. So let's just start with the main motivation and your assessment so far. I mean, the PIX payment system was rolled out as a way of expanding access to digital services in the payment system. And it's just been over a year now. What is your assessment as to how well this launch has gone?
Well, thanks for the question. Thank you, everyone. I want to congratulate the BIS on the bulletin. It's excellent. It's been very important to work together. I would probably start saying that when we designed the whole program for the central bank, we had this agenda that we used to call BC Hash, which was basically an agenda that wanted to foster innovation, inclusion, financial education. There's a lot of objectives, all of them very connected to technology. We always thought technology was, this democratizing instrument in the process of financial intermediation. So the first thing was trying to understand what was the tendency that we would see. We recognized that there was an exponential growth in technologies when we looked at financial intermediation, but we wanted to see, where we're going from here. And the first thing to notice, and that was like early in 2019, is there was this run to build vertical data chains as we are going to this information economy. So we are seeing this migration between content, payment, and texting. So whenever you look in emerging market countries, either Google was trying to do chats or WhatsApp was trying to do payments. So we are seeing that there was this run so that, at some point in time, the whole chain would capture the whole process of selling a product, from advertising to sale to payments and to interpreting what people thought about the product. So when we look at that, the first thing that came to our minds is how can we make sure that this is a competitive process? And the first place to start was we want to make sure that we have an instant payment process, an instant payment project that it's widely available and that puts everyone in common ground. So that was the first idea, is how to promote competition. And the first thing is we need to build something that is simple enough so that all financial institutions can use it, that is open to all financial institutions, and that has wide participation. So that was the first idea, and we actually worked on a lot of the things on how to make it friendly. The second is we wanted to be, it needed to be inclusive. So the first thing is it needs to be, either cheap or free. So we designed it to be free for individuals and very cheap for companies. So as that, we were very, very much surprised on the amount of new keys that were being registered in the system. I remember in an interview right after launching, someone asked me, what do you think is going to happen in terms of the usage? And I thought, maybe in 6 months we'll have 20 million people using, but that happened in, a week and a half. So, I mean, I think that tells us the speed of the process. We now have 114 million people. That's more than almost 70% of the adult population. We have 9 million companies, around 65% of the companies are using. And so I think we achieved the objective of being competitive and being inclusive. One other thing that we wanted to have is to be very transparent. So the question is, how can you be transparent from the very beginning? Well, you need to set up the rules and not change them. So if you start changing pricing, for example, it becomes very difficult for the user to understand, I'm not paying now, I'm going to pay in the future. So it needed to be very clear, individuals don't pay, companies pay, and they pay less than they were paying now for the traditional methods. It needed to be fast and secure, so you needed to see the money right in your account at the same moment. There was a trade-off between being very fast and being very secure. We had a long debate on that. We could have made it much more secure, but then it would take a long time. And so this was taken into consideration. And to end, I think it needs to be forward-looking. You need to be looking at this and saying, okay, I have a platform that is open enough that I can add new features and I can do other things so that people know that this system will be here for a while. So those, I think, are the elements. Thank you, Mr. Shin.
Thank you, Governor. I think that's these numbers are really very impressive. 114 million people. Over 2/3 of the adult population, signed up to the system within a space of just over a year. What do you think is the secret to the success? I mean, what were the forces that actually led to this very rapid adoption? And in particular, what role did the central bank play in this very rapid adoption?
That's a very good question. In the very beginning, we were talking, being liberal economists, why should the central bank be involved in doing that? Why can't just we create conditions for the private sector to do it? And we thought a lot about that, and we thought there are a lot of steps that need to be taken so that you make sure that this is competitive in the future. And the technology was advancing very fast. We were seeing a lot of vertical chains being created, and we thought that was a good opportunity for the central bank to make sure that this puts a common ground for to make sure that we have a competitive landscape in the future. Because the challenge of regulation is really not doing something that works now. It's to create a regulation now that not only ensures competitive elements now, but also ensures that as the system grows, it will become competitive in the future. So it needs to be forward-looking in a way. I think one of the things that I think were responsible for the success is we wanted to create a brand so that people can recognize. Nobody can use the brand Pix anywhere. The brand can be used alongside the logo of a bank or of any financial institution, but Pix is a brand that belongs to the government. We wanted to create a strong brand with an easy name that people would remember, and we wanted to be very user-friendly. So I'll give you an example. In the very beginning, when we just launched Pix, I was a bit frustrated because the way I saw it and the way I would have designed it if I was in a bank was so to combine the agenda of the cell phone with the keys that we had in the system so that people would be able to automatically download the keys, interact with the agenda of the cell phone, and do a Pix without having to input numbers into the system. But it wasn't done like that in the very beginning. Some banks had some adjustments, but at some point in time, I actually called banks and I said, you can make this a lot better for you. And remember, this is a product that is a common level ground. So if you have it in a much user-friendly way, you're going to get more customers. So today, almost every bank has now the system that interacts with your agenda. So if you have someone in your agenda, your context, that either has an email or a phone number that is a key, it will be identified automatically. Also, we wanted to be friendly on other dimensions. So we needed to have a QR code process that was standard, that was friendly so that everybody can use. And we wanted to make sure that everybody understood this was a competitive environment. But also, as you go into the product, you need to develop governance. So we needed to be talking to everyone who was involved. We needed the banks to participate. We need to create a governance in which we hear everyone that is involved in the project. We did a lot of things to public consultation to make sure that everybody participated in this. And again, I think one of the keys is, being forward-looking. Whenever we talk about designing something, I'm not looking today. I'm looking, how is this going to look 3-4 years from now? Because, the growth is very exponential. So it can become obsolete very fast if you're not designed from the very beginning to add new features or to bend to certain circumstances. So I would say that those are the elements.
Absolutely. Let's move to the data architecture of PIX. I think it's we've seen growing awareness of the importance of privacy, and because we're using real names, there will be actually a great deal of onus on that. The fact that these instant payments can be made at the touch of the screen means that that kind of information transfer also has to be done very fast, but also in a very secure way. So, what are the features of PIX that ensure user privacy, and how have the regulations on data privacy influenced the way that you actually roll this out?
That's a very good question. Also, thank you. Well, from the very beginning, the challenge was trying to maximize, a balance of things, and the equation that we were trying to maximize was, I wanted to be as secure as possible, using data that is as little sensitive as possible. So if I can use a system that has data trafficking into the system that's not very sensitive, but at the same time is a secure system, then optimize both. And you need to analyze that. So from the very beginning, the keys are either phone numbers or your digital ID. Today, there's a system that if you go on the internet and you type the number of a person, 85% of the people don't go there to cancel the data, so you automatically get the phone number or the digital ID. So most of the data that is being used to transfer money in PIX is data that's not very sensitive. So the other thing is you need to be very transparent with what's happening. So as contrary to some other countries that only disclose leakage when the data is sensitive, we disclose it 100% of the times. So the other day there was a data leakage of 2,000 people, which is infimous compared to the number of users. And the data that was leaked was basically the name and the phone number. And we were talking to the press on that, and someone asked me, and I said, do you know what kind of data was leaked? And no. Well, it was the name and the phone number. By the way, if you have a checkbook, open the checkbook and look at what's written in your checkbook. It has your name, it has your phone number, sometimes it has your digital ID. So the data that is being used is not very sensitive, but you need to be very transparent on that. So we created a lot of systems that have data encryption. It's important to have an on-off system so that once you store the financial transactions, it's not exposed to the web environment in a way. So you have the gates that are being closed in terms of storing data and being able to use that. We limit the number of access because a lot of data leakage comes from within. So we limit the access to data. We also try to provide data even in case of requests from judges or things like that, we only provide the data, understanding that the data that we're providing is not very sensitive. We created rules in terms of abusing the use of data, negligence. So we did a lot of things to make sure that everyone in the system was motivated to be cohesive with the laws that we have. But I think the most important thing is try to maximize what I said in the beginning. If you can do a system, because data leaks happen, they will happen more and more frequently. It's happening to companies every day. It's happening to governments every day. So the main idea is if I can do a system that is very secure and use data that is not very sensitive, then I can optimize that. Thank you.
Yes, indeed. I think this is that's an experience that I think is very much shared by other jurisdictions as well. Now let's move to more the industrial structure, if you like. I mean, one of the things that we point out in the bulletin that we've just launched is that PICS mandated large banks with more than 500,000 users to join PICS. But that meant that many other smaller banks and indeed non-bank payment service providers also joined. So talk to us a bit about how you motivate commercial banks and the non-bank PSPs to contribute by being at the cutting edge of innovation.
That was also a topic that was very much debated. My idea was first, there's nothing I can do to motivate banks. What I need to do is to motivate the clients. Banks are motivated by their clients. So if you can motivate clients, we'll motivate banks. But we need to have a minimum infrastructure and a minimum critical mass so that the system starts working. So we require the 30 biggest banks to enter in the system. In the conversations with them, there was a lot of misconception in the beginning. The first misconception that they had was that what you're doing is just substituting what we have now and we charge for something that's going to come from the government. And I said, no, I don't think so. I actually think you're going to see increase in the velocity of money. You're going to see a number of transactions that far outweighs what we have today. And I think this growth is going to be exponential. And that's what happened. If you look at the number of transactions with PICS, it's many folds, many times the amount that you had in the past with the other instruments that we used to call TED and DOC. So I think in this process, banks started to understand that, actually, this is going to generate new business models. Today, you go and you see, for example, people asking for money in the streets, and they accept PICS. You go on the beach and you want to buy, things from people who are selling things on the sand, and now they accept PICS. So banks started to realize that maybe I'm losing here because I'm not charging for something that I used to charge, but I'm making money someone else. You created a lot of new business models, people who sell things with very small ticket value that couldn't do it in the past, now are doing. They are opening bank accounts, they are consuming banking services on that. You have a lot of people that just open their accounts just to have PICS. Actually, 25% of the people did the first transaction, digital transaction with PICS. So it was important to convince banks that this is not a zero-sum game, that actually the whole system is going to be larger, that we're going to generate inclusiveness, and that they're going to have new business models and new clients. So I think this was the main task. Everything else, and there's a lot of other things, but they all come, I think, as accessory. I think this was the main challenge, was trying to convince the banks that this was going to happen. I think we did convince banks that this is going, and then all of a sudden everyone wants to be in the system. And now the banks are actually using the system in their favor, because they don't need to carry so much money around, which is one of the largest costs for banks in Brazil. They don't need to have so much security in the system. They're actually using credit. They're doing credit using PICS, because now you can program the installments on PICS. So at the end, I think what initially was seen as an instrument that will withdraw revenue from the system is actually adding revenue to the system. Thank you.
I think that's a great point. I think that it's, I mean, that's a lesson for not only other emerging and developing economies, but also many advanced economies. I think would definitely benefit from that lesson. What I want to do, Governor, is now to look ahead, and maybe we can continue on this theme of how do we actually motivate financial intermediaries also to embrace this greater push towards financial inclusion. I love your point about to motivate banks, you have to motivate the customers. And let me bring in CBDCs in this context. I think one of the arguments you often hear is, well, won't CBDCs simply take away business from the banking sector? And CBDCs, I think, are perhaps also important because, in another way, because the kinds of data architecture that we've talked about, the digital IDs and the application programming interfaces, the APIs, they have a lot in common with the kind of data architecture that we would use for retail CBDCs. Of course, with the difference that with CBDCs there's a direct claim on the central bank. How do you see CBDCs fitting in your vision for the payment system and the financial system in Brazil over the next few years?
That's a topic that I think has motivated a lot of the central banks lately. I remember in the very beginning, it was kind of a long time ago now, on our first meeting talking about CBDCs, I got out of the meeting with a lot of questions, but not a lot of answers. I had a lot of questions without answers. And I thought to myself, being a lover of technology, I love technology. In technology, if you don't have the answers, you can't begin to develop a project because all the rails will fall in place once you have the answers. So the first question that I ask myself is, we have PIX. PIX is forward-looking. We can do programmable money into PIX. We can do smart contracts with PIX. So what is it that CBDC is going to bring me that I don't have? And we didn't have the answer for this question in the very beginning. It was very difficult. The second question that I asked ourselves is, okay, I am a banking guy, I come from a banking environment. How can I make sure that once you change the liability equity, the asset liability system, once you issue CBDCs, how can we ensure that this is not going to affect the ability of banks to do leverage on the deposits? And I asked this question around a lot of people that were more advanced than we were, and I didn't get any answers that I thought was satisfactory. So I went back, and in the next meeting, we have a CBDC meeting every month. Now we have actually twice a month. And I said, we need to start from answering these questions. So we look into the DeFi space. We look at what I think is happening right now, which is this interaction. I think this is probably what we're going to see growing in the next couple of years. This interaction between monetizing data. I think the world is after monetizing data. We haven't found the way yet, but a lot of companies are building digital wallets. Your savings will be partially the data that you have on yourself. So being able to monetize data will have an interconnection in which how you monetize that. And we thought this interconnection will require something that is more than what we have today. So this is a place for CBDC. The other thing is all this decentralized financing that's happening. And we look at the way it's going and how you have this decentralized autonomous organization that they're creating financial system within. And I've become very interested in metaverse lately. I've been studying that for a while now, and I see people are not looking at that. I don't remember any of our central bank meetings that anybody has ever mentioned this word. And if you look at the number of financial transactions that are happening in the metaverse, it's much more exponential than we are seeing in crypto, for example. Crypto outside alone. So I think you have all these interconnections. I think you need to go and look for standardization. Very important, the standardization to make sure that everything falls together. I also think there is an element that people don't look at so much, which is the capacity of reuse protocols. Because once that is in place and you have a common language, it will make financial innovation much cheaper. you're able to produce financial products in a much cheaper way because you're going to be able to reuse protocols. I think when you look at today, the main challenge of these platform financial companies, is they don't have a lot of new products because it's very costly for them to launch a product. And the thinking that you can have this universe of reusable protocols, I think would lower even more the barrier of entry on that. So to end, I think I have exceeded my time. The challenge for us now is on the second question, which is how can I do that and make sure that we don't interfere with the ability of banks to give credit. And the way we decided to do was to have a kind of a different system in which the banks are able to issue stable coins on their deposits, and their deposits are guaranteed by the CBDC. So that when you look at M0 and M1, the banks can issue stable coins on the money that they have, and then you actually have a two-layer system that interacts with the layer that we have right now, which is just transactions backed by fiat money. So this is more or less, I don't have a lot of time to explain, but this is more or less where we're going. And I think at the end, the CBDC will interact with liquidity tokens in a way to bring more people into the system. Thank you.
Well, that was really illuminating, Governor. Thank you very much for joining us. We could go on for a long time, but we have to make way for the next session. Thank you again. Thank you for the very insightful remarks today. We certainly have learned a lot. So thank you all who joined, and please stay tuned for the next session, which is also going to be on financial inclusion.
Thank you, Mr. Shin. Thank you, everyone.